Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games that big companies play. Today we are diving deep into the financials of Franklin High Income Fund, and let me tell you, this report is packed with numbers that tell a story about where your money is going and how it is growing. Or not growing, stick around, because we will uncover what is really going on behind those impressive financial statements, and we have a super active Discord community linked in the description below, so make sure you check that out for more exclusive content and discussions. This annual report for Franklin High Income Fund covers the period from October 2024 to September 2025. Think of it as a yearly checkup for this investment vehicle, detailing its performance costs and what it invested in. They compare themselves to the ISPO for US High Yield Constrained Index, and for this past year, their class of shares returned 7.03%, while the index returned 7.23%. So they slightly underperformed their benchmark, but it was a pretty close race. Let's talk about costs because that directly impacts your returns. For a hypothetical investment of $10,000 in class of shares, the costs for the year were $86, which is 0.83% of your investment. They mention that these costs reflect fee waivers and expense reimbursements, meaning without those, your costs would have been even higher. This is pretty standard for mutual funds, but it's always good to know where your money is going. Now, for the performance numbers, this table shows average annual total returns over different periods. For the 1 year ending the 30th of September 2025 class, a shares had a return of 7.03% without the sales charge and 3.01% with it. Over 5 years, it was 5.77% with the sales charge, and over 10 years, it was 6.01% without and 5.60% with the ICE Yield Constrained Index, which is their benchmark, returned 7.23% for the year 1 year, 5.54% for 5 years, and 6.06% for 10 years. So in the long run, they are performing very similarly to their benchmark. It is interesting to see the difference between the returns with and without sales charges, which highlights how those upfront costs can impact your initial investment growth. Looking at the key fund statistics as of the 30th of September 2025, the fund had total net assets of a whopping $2,854,407,780. That is a massive amount of money, showing the fund is quite significant in size. They hold 353 different investments within their portfolio, and the total management fee paid was $12,579,689. The portfolio turnover rate was 39.11%, meaning they bought and sold about 39% of their holdings during the year. This turnover rate is important because frequent trading can lead to higher transaction costs, which ultimately can eat into returns. When we look at what did the fund invest in, as of the 30th of September 2025, the breakdown shows a heavy concentration in corporate bonds, making up 95.0% of their total investments. That is a huge chunk. Common stocks were only 0.3% of their investments. This tells us they are primarily focused on debt rather than equity. Let's dig into those corporate bonds. We see a massive list of different companies and bond types. For instance, under Aerospace and Defense, there is Bombardier Inc., with a senior note paying 7% that matures in 2032. Then under Automobile Components, we see Adient Global Holdings Limited with a senior note at 8.25% due in 2031. This section is extremely detailed, showing a diversified but very focused investment strategy on corporate debt. Now, let's look at how these different share classes performed. Class of shares had a net asset value of 96,380美元 473. Class of shares had 1,206美元 38,1679. Class C shares had 7,823美元 333. Class R shares had 59,595美元 865. Class R6S shares had 21,541美元 247. And finally, advisor class shares had 33,685美元 187. It's clear that Class R and Class A are the largest share classes holding the most assets for the fund. In the statement of operations, we see the fund's income and expenses for the year ended the 30th of September 2025. Their total investment income was $193,386,271. This income comes primarily from interest, a massive $188,816,983 of it. This really emphasizes their strategy of investing in debt instruments. Total expenses for the year came in at $21,265,106 after waivers and reimbursements. This resulted in a net investment income of $172,366,641. Then, When you look at realized and unrealized gains and losses, they had a net realized loss of $9,897,255, but a net unrealized gain of $24,581,813, leading to an overall net increase in net assets from operations of $187,051,199. Looking deeper into the financial commentary, particularly the board approval of management and sub-advisory agreement section, we see a detailed discussion about the renewal of their management agreement. The board considered the nature, extent, and quality of services provided by the manager, the fund's performance compared to its peers, and the fees charged. They compared their management rate to a median of 0.450% and found their class of shares fee of 0.25% was well below the median, and in the lowest quintile of their peer group. This suggests they are managing costs well relative to their competitors. This section is the auditor's stamp of approval. PricewaterhouseCoopers LLP states that the financial statements present fairly, in all material respects, the financial position of the fund, and they are free of material misstatement. This gives us confidence in the numbers we've been looking at. They've been the auditor for Franklin Templeton Fund since 1948, so they have a long relationship. Alright, let's wrap this up with my take. The Franklin High Income Fund is a massive entity primarily focused on corporate bonds, which as we saw makes up 95% of its investments. Their net investment income is substantial, driven by interest from these bonds. While they slightly underperformed their benchmark this past year, their 10-year performance has been very similar, suggesting a consistent strategy. Costs are managed reasonably well, especially with those fee waivers, and crucially, their financial statements have been rigorously audited. The main risk here, as with any high-yield bond fund, would be economic downturns or significant increases in interest rates that could negatively impact the value of their bonds or increase the likelihood of defaults. However, their diversified holdings across many industries offer some cushion. Overall, for investors comfortable with the risks of high-yield bonds, this fund appears to be a stable, albeit slightly underperforming this past year, player in the market with a clear and focused investment strategy on generating income through debt. That is our analysis of the Franklin High Income Fund's latest filing. What are your thoughts on their investment strategy and performance? Let me know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives into corporate finance. And don't forget to join our Discord community, linked in the description for more insights and discussions. Thanks for watching. See you next time.